everyone, welcome back to my channel Ask Parul. So we have our guest Prashant Mohan, who is the Chief Marketing Officer of one of the famous website called as Sharesight. So I'll tell you a little bit about Sharesight. It's an online portfolio tracker that empowers investors by simplifying complex investment data, helping them make informed decisions and become investment savvy. With over 400,000 users globally, the goal of Sharesight is to bring institutional level insights to all investors, whether you are a beginner or experienced investor, and maybe even an intermediate, such as if you're an accountant or financial advisors. Welcome, Prashant, to my channel. Maybe I'll just quickly introduce you for all our viewers and audience. So, Prashant joined Sharesight in the year 2018. Before joining Sharesight, he was responsible for driving customer acquisitions and growth at leading fintech Prosper. He has held various roles across finance and technology companies, including running strategy and sales operations for Google in Australia and New Zealand. He holds a master's degree MBA from ITSEAD Business School in France and Singapore, and he's also a graduate from BITS Pilani in India. So, welcome, Prashant. I think we have a lot to cover about Sharesight. So maybe I think what I'll do is I'll start by asking you a little bit that there's this normal perception about Sharesight that it is primarily about performance monitoring, which I am pretty sure it's not the case because there are a lot of features in Sharesight which goes beyond just the performance monitoring tool. And there are a lot of useful features based on my experience, what I have used. So maybe do you want to quickly give us a run through of what are the most popular features of Sharesight that can help the user in their day-to-day activities? That we can just maybe get started with there.
Yeah, cool. Thanks so much for having me on this, Parul. Real honor to be here. So on Sharesight itself, the primary reason why people use us are performance and tax purposes, but there are a number of other use cases as well. So number one is there are these things in investing called corporate actions, which can vary from a whole set of things, such as like anything to do with dividend declarations or any stock splits, any kind of mergers and acquisitions or demergers. So all of those, as an individual investor, is quite tedious to keep track of. Even bonus shares come in that category. So corporate actions is a big reason why a lot of our users have Sharesight. And the primary use case is really dividend tracking. So if you invest in any dividend stocks, you know that your broker may not necessarily have that information.
Yeah.
And other cases like dividend reinvestment plans, there's this ecosystem of a broker, the share registry, and there's a bunch of stuff on the exchange. All disparate information spread all across multiple systems. What Sharesight does is bring it all together and shows it to you in one single place. So it's effectively like your personal CRM for all your investments. And when we talk of why else people would use Sharesight, it's also to do with how you can track multiple asset classes. So its name is Sharesight, but it also tracks other assets such as bonds, a whole suite of unquoted instruments. You can track your investment property, you can track your gold, or even other fancy investments like art or a boat or a motorcycle, all of those kind of things.
Yeah.
The other part, of course, is along with shares, ETFs is a given, but also cryptocurrencies and
Okay.
any kind of forex as well. So we track over 100 foreign currencies, as well as about 100 cryptocurrencies, all the top ones. So there's that
Which are
aspect.
your top ones, like in terms of currency? Like, which are your top ones? Is it US primarily or Australia?
Everywhere, really. Yeah,
Okay.
it's pretty much the entire suite that's available in the United Nations. Maybe some small currencies, maybe not, but yeah, I think anywhere there's a sizable population, we definitely cover it.
Yeah. So it doesn't matter if you're in India or US or Australia or UK, you can still use Sharesight. If
Yeah,
I'm
absolutely, absolutely. So there's two parts again, like with regards to currencies itself. One is like the forex kind of a model where you're buying a foreign currency and you can track how it's tracking against your base currency. And the way you set your base currency within the portfolio is, where are you primarily taxed? That's the question you need to answer. If you're a tax resident of, you can only be a tax resident of one country usually. And that means like wherever is your tax residency, we ask you to set that as your base currency, and then everything else gets translated to that.
Yeah. Yeah. And I think I just wanted to inquire a little bit. You mentioned that brokers doesn't show each and everything, even though you conglomerate and you bring together the information across brokers, let's say. I also read a very interesting article on your website which says that Sharesight can help you show the true performance. So what exactly we mean by true performance? Do you mean that the brokers sometimes miss out something? Do they do it like on purpose, or is it just the limitation of what they can actually show you, and how ShareSite helps to remove that limitation?
Yeah, wonderful question. This is one of my favorite rabbit holes to go into.
Okay.
Okay, so to begin with, we introduced a concept, two types of returns that you can calculate. One is called time-weighted returns, and the other is called money-weighted returns. Time-weighted return is simply this: like you bought something at X dollars or X uh, value, and today it's 2X. So you say, okay, I got X return. That's it, right? X over X, therefore, like it's 100% return.
Yeah.
That's time-weighted return. It has no it has no significance of time built into it. It's just a total number. So when it comes to a brokerage, for example, you'll see the time when you purchased your first stock times the quantity, and the current quantity times the current price. And that difference is typically what it shows you as profit or loss.
Mm.
Now, what ShareSite does is a different methodology. It's called money-weighted return. And what money-weighted return does is actually incorporate all the ins and outs of your portfolio to calculate the overall return, and we annualize every number. And the reason you annualize every number is so that you can compare multiple asset classes over multiple periods of time. So your classic example, you go to a barbecue or you go to a get together, and your brother-in-law is there saying how he made so much money out of cryptocurrency or property or whatever. And it has again no time concept in it, right? So if something has doubled in value over 7 years, that means it's a 10% return. Now, up to you whether you think 10% return is good or it's just okay. If you'd invested the same amount in an index ETF, maybe you would have got the same number. So there's
Yeah.
nothing fancy about getting that double value over
Yeah.
7 years. And that's the value of incorporating that true performance. It's truly annualized and compounded over time. And that's why we prefer this methodology, where you've got multiple tranches of ins and outs. Let's say, for example, you've got multiple, you know, you've done dollar cost averaging of the same share over multiple periods of time. Now you'd have got some at a lower amount, some at a higher amount, but the money weighted return takes everything into consideration to calculate your true annualized return. And again, by converting all your asset classes to this common denominator, you can truly compare how each thing is performing versus another.
Right. And I also looked at ShareSite when I was working on and I was, playing around with the tool. I believe there are some very, very unique features when it comes to, let's say, currency movements, because it's so difficult. Let's say if you have been invested in multiple places, and if you are a diversified kind of an investor, then you potentially can see the currency movements, which is, I believe, a very unique feature. Then, especially for Australia, you have franking credits, you have self-management, super funds, record keeping. So how do you manage these different geographies, and what features can you offer to an investor who is, let's say, diversified across different geographies or brokerage firms, or maybe even investment instruments, like you mentioned, you're across crypto, ETFs, etc. So I think that would be very, very interesting to understand.
Yeah, yeah. Again, great question. So, with regards to currency movements, so let's take an example to explain what that is. Let's say I bought Google shares for 100 US dollars, let's say 5 years ago, and today it's tracking at, let's say, $150. And I don't know the share price of Google, by the way. I'm just using that as an example. Now, you used US dollars in this case, so it has appreciated by, let's say, 50% over this period of time. Now, in the meantime, you've also got a kicker in the fact that, like, say, an Australian dollar has gone down compared to the US dollar. So, in true Aussie dollar terms, what you'll find is the actual movement of currency has given you a little more boost in terms of your Australian dollars as well. So, this is why it's really important to consider currency movements as part of your portfolio return. And what Sharesight does is breaks down your total return to three components. So, one is the capital gain, two is dividend return, and three is currency move fluctuations. So
Okay.
when you consider all of these three components, you get your true actualized return. Because ultimately, when you sell this, you are going to get it in your home currency, and that's why it's really important to track across multiple all these three dimensions. And so that's the part around currency fluctuations. Now, this is in the case of a stock or an equity, but you could say the same thing for a cryptocurrency or even an FX instrument. These things are always moving against one
Yeah.
another, and
Commodities,
to
for example, I'm not too sure. Like commodities,
commodities.
for example, because it's so fluctuating across different geographies.
Yeah, exactly. So you are then able to make use of these this actual up-to-date information on
Yeah.
actually how you're performing.
And it's
And
real time, right? It changes every day. I mean, based on the actual. Yeah.
yeah. Typically, we do like I think 15-minute delayed pricing. So
Wow.
it's
That's amazing.
yeah. And when it comes to other things like SMSF record keeping and how it works for Australian investors, so let me like take that in phases. So first is like with regards to SMSF record keeping, obviously it gets audited on a frequent basis, and now your auditor will ask to see every possible record. You need to have a paper trail of everything that's available. And basically, what that means is then you're able to show every buy, sell, dividend declaration, any other form of corporate action that has arrived. You can literally store your PDF against that particular transaction, and everything is recorded. The
Okay.
other reason why SMSFs are, the other audit point that you require to show is actually the valuation of your portfolio at the beginning of the period to the end of the period. So in the case of Australia, it's kind of usually beginning of financial year to the end of financial. So how much has your portfolio actually changed? Now that is like you get an exact valuation at the beginning of the financial year, say 1st of July to the 30th of June the following year. And you can see not only how much the valuation has changed, but also any other things that you've added through the year, any further transactions. So that's another set of record keeping trail that you can keep use of. There's multiple other things, like I said, multi-asset tracking. Let's say you have an investment property and you want to track how that investment property is tracking against your shares, for example. You want to benchmark and say, okay, the age-old debate of property versus shares, and you can actually put in your investment property into Sharesight, track the rental that you get as dividend income, and basically then you can see how that's performing on an annualized basis, and you can make some really good judgment calls on what's working for you. When it comes to the other part which you mentioned, which is regards to tax credits, Australia has the dividend imputation credit system, which basically means that the same thing cannot be taxed twice. So let's say a corporate tax rate in Australia is typically about 30%.
Mm.
Uh, Now the company has made a profit, 30% is removed as tax from it. The remaining a portion of that gets distributed as dividends to retail shareholders like you and me. And then from there, because that has already been taxed at 30%, let's say your personal income tax rate is only 25% for whatever reason. So if that means you already paid more than what your income tax rate requires you to, so you get those credits back in the form of franking credits, which means you are owed more by the tax office. On the other hand, if you're on the top tax rate and you're paying 47%, then you've already paid 30%, or like
Yeah.
30% has already been paid on that profit that's been made. So you just need to cover the balance. So that's the basis on which the imputation tax credits are calculated. But what does that mean at a micro level, at your investment level?
Mhm.
And that's what gets translated into franking credits and tax credits, and all that is displayed in a clear table for you within Sharesight.
Yeah.
And you can that way not have to pay anything more than what you actually have to. In fact, you can use that to go and claim more tax credit if that is the case. If that
Yeah.
is the case of your tax situation, and yeah, definitely please see a tax practitioner for any further advice. But
Yeah.
yeah, the
Yeah.
makes it much easy for you to
Yeah.
keep track of everything.
So while we are on taxation, I think I have, and it may be a very basic question, but so for example, let's assume in Australia here, we have July onwards, we start the taxation, the return of taxation. So, do you really see that it's only at that time when it is the most relevant versus the rest of the year? That's number one. And second is that I believe when I'm filing my return, ATO does, like Australian Tax Office, it also does capture all your dividends and other information, right? So, like, what is the additional then share side is adding on top of that? And this is like a very basic question, but I think a very pertinent
Sure.
question.
Yeah, another really good question. So, is it relevant only at tax time and not at other times? I would definitively say no. It's actually relevant at every time. So it's a bit like what we like to think of it as a kind of a painkiller versus a vitamin, right? So it at tax time, it's a painkiller. You desperately need that information.
Yeah,
Without it, you can't do it. So it feels like it's the most obvious use case. But the rest of the time, you want to keep good health. You want to
yeah,
keep good investment health
yeah,
across all your investments.
yeah.
And you know that micro improvements by taking vitamins every day is really important for your health as well.
Yeah.
And that's where the rest of the year it's equally important because you are armed with information and you've got complete control over actually what you own, how you're doing, how you're performing.
It's
In
mainly
order
like
for you
it's mainly like taking data-driven decisions as well, I believe, right?
Exactly right. Exactly right. Otherwise, you have like a rough idea with with your broker. Okay, you log into your broker every now and then, and you see, okay, profit and loss. Okay, whatever. First of all, that's not. It doesn't mean anything. It's like something is up, something else is down. That's
Mm.
pretty much all you get to see with your broker. So that's insufficient information. Sure, you can keep track of all of this on a spreadsheet yourself,
Yeah.
but you know that as your portfolio gets more and more complicated, it starts getting quite tedious, and one error that creeps in and it compounds itself
Yeah.
down the track. And yeah,
Yeah.
that's the way
I remember, I think that reminds me, I had two ATO queries this year, even though my portfolio is not very complex, but small, minor mistakes. And I can't even do anything about it. So I had to pay that extra money to ATO, right? So I think that, I
Yeah,
mean, that's a classic example I can tell from my own experience.
yeah, exactly right. Yeah, and we've heard that from so many customers of ours that because they've used some part of ShareSite, they've actually been able to get far more accurate returns to the ATO and never had to pay any extra dollar. Or in fact got some return back as
Yeah.
well. Coming to the other part, that's a really good question. The ATO and various tax agencies across the world have been getting more and more sophisticated, and things have been getting pretty good with the pre-fill information. However, there's still a really good use case for keeping track yourself. One is simply to make sure that it's actually correct. You know, just because a big organization does something does not mean that it's correct. So
Correct.
you have the ability to keep full track and control over what you actually own. The second part is even with all the pre-fill information, you have to see. Let's take, for example, ETFs. Now, ETF components or the distributions even after the end of the financial year, actually at the end of the financial year, there are further adjustments that take place. In some cases, the cost
Mm.
base gets adjusted up or down, and that changes your tax calculation, be it an income level or at a capital gains tax level, or in some cases, even foreign income level, right? So foreign income is always taxed at a different
Yeah.
tax rate compared to domestic income.
Yeah.
So, and this is every country, it's the same story. Now, when all of these things are happening, you still need to keep a good record of what is happening inside your portfolio. The
True.
third big use case is a tax office, such as the ATO. or any other tax office has view of your investments within that country. But what if you have a foreign holding,
Yeah.
right? So if you have a foreign holding, you still need to pay tax on that income. And that is actually not available. And it's kind of there, but not there, particularly for any American
Yeah. Yeah.
any Americans, if you're an American citizen, you're paying tax for life, no matter where you live, whether you're a tax resident or not. They have all these other set of rules, and that's another set of use case. But let's say you're an Australian or an Indian, and you want to keep track of actually how your foreign holdings are doing. In fact, in the ATO recommends that you keep track of every dividend declaration in both currencies. So
Mm.
whatever, like say if you have a US stock or an Indian stock, if you have you want to keep track of, okay, what is the dividend declaration in Australian dollars, what are the dividend declaration in the foreign currency, and you want to keep track of all of that. And this is another part that's completely automated within Sharesight, where every single transaction is paired up with whatever currency you're tracking.
And I
Uh,
think also probably is helpful because what I've usually seen with these taxation office and systems is that it takes a long time for them to even fill up that. Let's say it's starting in July, sometimes it will come in September or something like that. So there's a lead time, of course, of 2 to 3 months that you have lost versus you can just readily file your return. Let's assume if you're on top of things and you don't have to really bang your head for 2 to 3 months, or at least wait for ATO to pre. Because sometimes that's what has happened with me this time when I was filing my return. I just almost forgot that I have done some investments, for example, and obviously I would have lost some information.
Yeah, no, absolutely. And it's in some cases, I mean, it's the same thing with ShareSet as well, where we need to wait for some time because we get information from share registries as well as product providers. In the case of ETFs,
Yeah,
we wait for that information to come, look at all the cost-based adjustments, and then make it available for everyone.
yeah.
But yeah,
But definitely there is a big improvement as compared to just not relying on ATO or any other tax agent for that matter.
yeah, exactly right. Yeah.
And I think you also touched upon if you have properties, for example. I am really interested in that. If somebody who is, because investments is a broad portfolio, right? Somebody can have shares, ETFs, which of course you guys do track. But let's assume somebody is heavily into real estate. Let's assume properties, real estate, which most of the countries are like that. The youth is like that, especially in Australia. It's a hot thing. How do like Sharesight help those kind of investors who are heavy into real estate or property?
Yeah. So again, like just a caveat there that it's not as sophisticated with property investment tracking as it is with shares and ETFs. We definitely cannot handle taxes. We also cannot handle any of the negative balances when, typically property is always leveraged with some
Yeah,
sort of a loan and things like that. So we are not able to handle any of that. But from a pure performance point of view, you're able to track, okay, the value of the property, the dividend income, which is the rental income that you get, and any kind of price change that happens on the property, just so that you're aware and you're able to keep track of how exactly it's performing. Obviously, it's not, like with stocks and ETFs, things are priced every second. That is not the case with property. It's not liquid, and price information is whatever the buyer is willing to pay, right? So that's not, again, it's not available in the form of a stock exchange or any of that thing.
yeah,
So we expect a certain reliance on manually updating certain things. It's, at the end of the day, a lot of property valuations are a form of guesswork and guesstimating, but it does help you keep track of exactly how it's performing. And again, tying it back to that common denominator of comparing everything on the same common basis.
yeah. So I think, yeah, I think that obviously gives us a very good view that ShareSite is not just a mere performance tracker, but it goes much beyond that. So not only it shows the true performance, which potentially some brokers may not be able to showcase, then currency movements, even for things like commodities, etc., we can track that. if you are a diverse kind of an investor across different geographies, then it helps you. I think the best thing is that it makes your tax return a breeze. It definitely makes it so simple. And on top of that, at regular intervals, not just at the time when you have to file a tax return, but even at regular intervals, it helps you to make data-driven financial decisions. So for me, I think those are the collective, like a value proposition for ShareSite, and not just a mere performance tracker. Do you think that am I right, or am I missing something?
100% correct. 100% right. The other thing is also, again, like many of your viewers might have read this book by James Clear called Atomic Habits.
Yeah,
And
that,
yeah, it's a fantastic book, and it's all about getting into habit of doing the right thing repeatedly over a long period of time, and how that changes your life. And financial decisions and investment decisions are a lot about keeping track of why you did what you did.
yeah,
With ShareSite, you're literally able to annotate every decision you make with notes and specific hypothesis on why did you purchase this at this price? What was your thinking? And it's always good to go back and refer to these decisions. Now, yes, you can do this on a spreadsheet, you can do this in your diary.
yeah. But it's
It's
tedious.
not, it is tedious.
Yeah,
Now, here's a single place where you can track everything, build some really good investing habits into you as an everyday investor,
yeah,
and that's like makes you as a much more disciplined and, like you said, a data driven investor.
yeah.